Hey, here today with Pat Strubbe, preservation specialist. Wanted to shoot a quick video. Yesterday, Federal Reserve raised the Fed funds rate by 0.25 basis points. A lot of times I get questions as a mortgage lender how that impacts overall mortgage rates, but wanted to get Pat Strubbe's opinion on how the Fed's fund rate and the raising, lowering, or keeping it equal impacts your clients from a wealth management perspective.
Yeah, I think when we think of your nest egg, your net worth, your savings and investments, interest rates going up is great if you want safe money, if you want to lock in a CD, if you got money sitting emergency reserves in a money market, annuities with guaranteed rates. It's really a great time right now. A lot of people think this might be as good as it's going to get.
Right.
So those are things we're thinking about. On the flip side, anytime the rates go up and the economy is shaky, sometimes the market investments can be very volatile, and we're seeing a lot of that right now. So those are the things we're talking about with our clients. And Sam, I wanted to kind of turn it back to you. My assumption was always when rates go up or down, that's the exact same thing with mortgage rates, but you've explained to me how that's not necessarily the case.
Yeah, not necessarily. So the Fed will raise or lower their rate expectations based on essentially their confidence that we are getting inflation under control. A big piece of consumer spending is a home. So it's the single biggest purchase that you can make. So when the Fed tries to control inflation by changing their Fed funds rate, either raising or lowering it, it impacts mortgage to a certain degree, but not to the impact that many people think. Many people think the Fed raises it 25 basis points, my mortgage is going to go up by 25 basis points when I go to finance a new house. That's not the case. It's about consumer confidence. Yesterday's report with only 25 basis point increase is actually a good thing. We saw a really positive reaction from the mortgage-backed securities market yesterday. So rates are down, spring is here. Maybe we're starting to get that thawing out that we're looking for.
So if you may need a loan, good to talk to someone like you, so you can just find out what's going on in the market right now. And obviously we can't predict the future,
right?
But someone who knows what's going on in the markets can help you kind of navigate those waters.
Correct. Just like you lend a helping hand to all of your clients from the wealth management perspective, at Guild, we're glad to give a quote, do some investigating for you, and tell you how it impacts your mortgage rate.